Listen, if tax season is knocking on your door and your credit cards already look like they've been through a street fight, you are not alone. Over 111 million Americans are carrying credit card balances they can't fully pay off each month. That means a whole lot of people are out here trying to pay Visa, MasterCard, and Uncle Sam at the same time. And trust me, Uncle Sam don't do payment excuses with feelings. So today, I'm going to show you 5 smart things you need to do before you file your taxes if you've got credit card debt. Plus, I'll show you 9 types of income that may not be taxable so you don't leave money or peace of mind on the table. Imagine this. A guy named Marcus runs a little side hustle. He's got business expenses, personal bills, and 3 credit cards all doing backflips. Tax season rolls around, and now he's trying to remember what he spent for business, what he spent on groceries, and why he bought a motivational office chair at 2 a.m. That's how people get in trouble. Not because they're lazy, because they're overwhelmed. So let's clean this up the smart way. First, look over how much interest you paid. Now I know, this is not Friday night fun. Nobody says, "Yo, pass me the snacks and my APR statement." But this matters. If you use a credit card for business expenses, that interest may be deductible. If it's personal credit card interest, generally it's not deductible. So before you file, separate business purchases, personal purchases, and the interest tied to each. Because if you mix them up, you could either miss deductions or accidentally wave a red flag at the IRS like you're directing airport traffic. And we don't do that. Second, pay off what you can, especially the highest interest card first. Because credit card debt doesn't just sit there politely, it grows. It charges interest. It messes with your cash flow. And it can raise your credit utilization, which can hurt your score too. So even if you can't wipe it all out, make a dent. Every dollar you knock down is one less dollar collecting interest, like it's building an evil little empire in your wallet. You don't have to be perfect. You just need to stop the bleeding. Third, if you've got big business expenses coming up, watch the timing. Why? Because if you make certain legitimate business purchases before year end, they may help reduce your taxable income for that year. But if you wait too long, you may have to wait until next year to get that tax benefit. That's especially important if cash is tight and you're trying to squeeze every legal dollar out of your tax return. Translation? Don't just spend money, spend strategically. Fourth, check your cash flow and make sure you can still pay your taxes. This is where people mess up. They throw everything at credit card debt, and then boom, tax bill. Now they've got no tax money, no emergency cushion, and they're thinking about putting the IRS on a credit card too. That is not a financial plan. That is a financial fire. So instead, split your money with intention. Some toward debt, some toward taxes, and if you're self-employed, possibly some toward estimated tax payments. Balance beats panic every single time. And fifth, use tax season to reset your financial life. If you've been leaning too hard on credit cards, whether for business or personal life, this is your sign to build a budget that covers your real expenses, your tax obligations, and a plan to keep interest low. Because let me tell you something funny but true. You can sometimes negotiate with a credit card company. You are not negotiating with the IRS like it's Facebook Marketplace. Would you take half in a prayer? No, they will not. Quick bonus before we go. There are several types of income or benefits that may be non-taxable or treated differently depending on your situation. Examples include qualified Roth IRA distributions, most inheritances and gifts, child support received, cash back, rebates, certain employer health benefits, some alimony situations depend on the divorce date, certain welfare public assistance benefits, qualified adoption assistance, some veterans benefits. Now, don't go wild and start freestyle filing taxes based on a YouTube video. But do know this, sometimes people are paying tax in their heads, on money that may not even be taxable. That's why knowing the rules matters. Bottom line? If you've got credit card debt, don't just rush into tax season blind. Before you file, 1. Check your interest. 2. Pay down what you can. 3. Time your business purchases wisely. 4. Make room for your tax bill. 5. and use this season to build a better money plan because taxes and debt can feel heavy together. But a smart strategy can take that pressure way down. Hey, before you take off, let me just say this really quick. If this message made you feel even a tiny bit, don't just leave like a New Yorker who doesn't want to make eye contact on the metro. Please do me a small favor. Hit the like button, subscribe, and drop a comment. Like, really big. And you know what? Most people watch but don't subscribe. Don't be that man, okay? Be a legend. Starting now. Real talk. What hits harder right now? Taxes or credit card debt? Drop your answer below. Somebody in this comment section probably needs your honesty. This video is for educational and informational purposes only, and is not financial, legal, or tax advice. Please consult a qualified tax professional, CPA, or financial advisor for guidance specific to your situation.